Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within financial filings. And boy, do we have a story about Upexi today. It's a tale of digital currency, convertible notes, and a whole lot of secured debt, a real high-stakes financial poker game. Alright, so Upexi Inc. just dropped their latest report and it's packed with some seriously interesting moves. They're essentially issuing new debt that can be turned into stock, a common strategy, but with a twist involving digital assets like Solana. The main event here is Upexi's secured convertible note offering. Think of it as borrowing money, but the lenders can also choose to convert that loan into ownership of the company later on. They raised a whopping $151 million, and get this, they're taking payment in digital currency, specifically Solana. Now, we're not talking cash here, we're talking about using crypto as the collateral and in this case as the payment for these notes. This is pretty forward thinking, especially considering the volatility of digital assets. The notes themselves are set to mature in 2 years and they're offering a modest 2% interest annually. And here's the kicker, the company can't repay these early. So lenders have the option to hold onto them for the full 2 years or convert them into Upexi's common stock. The funny thing is you can't just convert unlimited amounts. There's a cap, a limit to how much you can convert. So you can't just convert unlimited amounts. There's a cap, a limit to how much you can convert. So you can't own more than 9.99% of the company. This is often done to prevent a hostile takeover. Pretty neat, right? Interest is paid out quarterly and it's in cash. So even though the principal might be tied up in complex digital assets, the regular interest payments to the note holders are straightforward, cold, hard cash. This is a major reassurance for investors who might be wary of dealing solely with digital assets. Now, Upexi's common stock is traded on the Nasdaq, which is a major stock exchange. This listing means they're a publicly traded company and subject to a lot of regulations to ensure transparency for investors, which is why they filed these reports. To help facilitate this whole deal, they brought in AGP Alliance Global Partners to act as their exclusive placement agent. This means AGP helped them find these investors and structure the deal. Upexi agreed to pay AGP as the matchmaker that gets paid for a successful union and to make sure all these newly issued shares from future conversions can be legally sold by the investors. Upexi has also entered into a registration rights agreement. This sounds complicated, but basically Upexi promises to file paperwork with the government so that investors can sell their shares freely down the road. They have to get this filing approved within 30 days and confirmed within 60 days. This makes the investment more attractive because investors know they'll be able to cash out their shares when they want to. So who's making these calls? The report is signed off by Andrew Norstrud, the Chief Financial Officer. This tells us that the financial strategy and execution are being managed at a high level within the company. He's the one overseeing these significant financial maneuvers. This creation of a new debt obligation is a pretty standard procedure when a company needs capital, but it's the nature of the collateral that makes this filing stand out. Securing debt with digital assets opens up new avenues for funding, but also introduces new types of risk. The sale of these convertible notes falls under an unregistered offering that's typical for private placements like this. They're not selling these to the general public on an open market, but rather to a select group of investors who are presumed to be sophisticated enough to understand the risks involved. To spread the word about this significant financial event, Upexi also issued a press release on July 17th, likely detailing the offering and its terms. It's common practice for companies to announce major developments like this through public statements to keep the market informed. Digging into the specifics, the actual form of the secured convertible promissory note outlines all the nitty-gritty details. This is where you'd find the precise terms on conversion ratios, interest calculations, and default clauses. It's the legal backbone of the entire agreement. Now looking at the overall picture, what does this all mean for Upexi? They're securing substantial funding by leveraging digital assets, which is a bold move. On one hand, it shows innovation and a willingness to tap into new financial markets. They raised over $151 million, which is a significant amount of capital that can be used for growth expansion or research and development. However, there are risks. Digital assets like Solana can be extremely volatile. If the value of Solana drops significantly, the collateral backing these notes could become less valuable. This might put Upexi in a tough spot if they need to liquidate that collateral. Also, the conversion price of $4.25 per share is a key number to watch. If Upexi's stock price stays below that for a long time, investors might just take the cash and interest rather than converting. But if the stock price surges well above that conversion price, then those investors will likely convert, turning their debt into ownership. The fact that they cannot prepay these notes is also a point of interest. This lock-in gives the company stability in its debt obligations, as they know exactly what their interest costs will be for the next 2 years. But it also means they can't refinance or pay down the debt if market conditions become more favourable for them later. From a Warren Buffett perspective, we'd want to understand what Upexi is doing with this $151 million. Is it going into productive assets that will generate more returns than the interest they're paying? Or is it being used for something less tangible? The digital asset collateral suggests they are very comfortable with or invested in that space. It's a clear sign that Upexi is embracing the future of finance and looking for capital in less traditional ways. It could be a smart play if they can manage the risks associated with digital currencies, and if their stock performs well enough to make the conversion option attractive. However, if the crypto market or their own stock falters, this secure debt financing could become a significant burden. What's your take on Upexi's crypto-backed debt strategy? Let us know in the comments. If you found this deep dive into their financial dealings useful, please hit that like button and subscribe for more Decode corporate filings. And don't forget to join our Discord community linked in the description below to keep the conversation going. Thanks for watching, and we'll see you in the next one.